This is Campus Currency, and welcome back to part 6 of 9 of the FAFSA application process. In this video, we're going to be entering your parents' other financial information that goes above and beyond just their tax returns and W-2s. As you can see, we get to the parent financials part of the menu here, so that you know where you are. And they're going to be asking for information about other untaxed income or benefits that they received during calendar year 2019. Now, a lot of these things may not apply to your parents, but you do need to read through these items just to make sure that there is nothing that's applicable. So the first line item is combat pay or special combat pay, and this should be 0 for enlisted persons and warrant officers, including commissioned warrant officers. Now, if they do have combat pay or special combat pay, the way you're going to calculate the taxable amount is to use the total combat pay from your service person's leave and earnings statements, and you're going to subtract out the untaxed portion. And that's going to be the amount that's reported on W-2 in box 12 with a code of Q. The next line item, and this refers to your parent, is any student college grant and scholarship aid reported to the IRS in your parent's income. And that includes AmeriCorps, it includes grant and scholarship portions of fellowships and assistantships. So if your parents attended college in 2019, at the end of the year they would have received what's called a 1098-T tuition statement. And whether or not they need to report an amount in this line item is going to be different for every family. So you will need to look through IRS Publication 970 to determine whether or not you have to report anything in this line item. But generally it's reported the taxable portion of a scholarship, a fellowship grant, or other grant is going to show up in the wages, salaries, and tips line on your parents' tax return on the 1040. The next line item they're looking at is education credits, and that can be found on IRS Form 1040. And it's going to be Schedule 3, Line 3. And here we have an example of that. So line 3, education credits, in this case would be $1,500. The next line item they're looking at is untaxed portions of IRA distributions and pensions. And to get that amount, you would go to IRS Form 1040. You're going to add lines 4A and 4C, and then you're going to subtract out 4B plus 4D. But you want to exclude rollovers, and this is very important because a lot of families do make the mistake of adding rollovers into this field, which is incorrect. So if we take a look here in this example, you would add 4A plus 4C and you would get $2,000. And then you would subtract out 4B plus 4D, which is $1,300. So you would report $700 in this line item. However, if this is a rollover, so basically if you just took your retirement and maybe moved it to another company, rolled it over to a different plan, and you didn't actually take out any of the money, then you do not include any amount on this line item. If you did, however, do a rollover and you took out some of that, it will show up in the taxable amount, which does carry forward to your adjusted gross income. So you don't have to worry about that, but you're still not going to report anything in this line item if it's a rollover. The next line item we're looking at is IRA deductions and payments to self-employed SEP, Simple, KEO, and other qualified plans. And you can find that on IRS Form 1040. That's going to be on Schedule 1, and it'll be the total of lines 15 plus 19, which in this case would be $7,000. And finally, on this page, the last line item you're looking at is tax-exempt interest income, and that's on IRS Form 1040. It's line 2A. Now, be very careful with this. This is also another mistake that's common among families to report. You're only reporting the tax-exempt interest, which is 2A, not the amount that's reported on 2B. Moving along to the next set of questions, which also pertain to calendar year 2019, the first line item they ask is child support that your parents paid because of divorce, separation, or as a result of a legal requirement. I've highlighted paid here because in a later section it will ask about child support received. Now, you're not going to report any child support that was paid for children that are living in your parents' household. So for example, let's say parent 1 is your biological or adoptive parent. They got remarried to parent 2, which is the step parent. Parent 2 has children from a previous marriage. If those children are living in your household with you and parent 1, you are not going to report an amount in this line item. It's only if those children are living outside of the household that you will report any amount here. The next line item looks at earnings from work under a cooperative education program offered by a college. So a cooperative education program is basically a program that your parents would be enrolled in that balances classroom theory with periods of practical hands-on experience. Essentially, they're going to be alternating between sitting in a class and studying material and then working full-time, gaining practical experience in their field of study. So if they received an amount under that program, then they will report those earnings in this line item. And then the next item they're asking about is taxable earnings from need-based employment programs such as federal work study and need-based employment portions of fellowships and assistantships. So once again, this is for your parents if they are attending college and they were working under a federal work study program or received any need-based employment from fellowships or assistantships. That is where they're going to report this line item. Moving along to your parents' other untaxed income received in calendar year 2019. The first line item is asking about child support received for all children, and you're not including foster care or adoption payments. Now, this is as opposed to the questions in the last section, which were asking about child support paid. This is for child support that was received for any and all children, even if they are not living in the household. The next line item asks about housing, food, and other living allowances paid to members of the military, clergy, or others. So in this case, let's take clergy for example. If you're working for a church, synagogue, temple, mosque, or other religious organization, you may be receiving a housing stipend as a result of that employment. If you receive that amount, you need to report that here. And it's usually reported on the person's W-2 form, but not necessarily. When we're talking about others, this could be, for instance, a parent that works for a company that may have had the parent move overseas temporarily or permanently, and as a part of their salary package, they receive a housing stipend. That amount would also be reported in this line item. Now, when we're talking about the military, you will not report the value of on-base military housing or the value of the basic military allowance for housing, also known as the BAH. You are, however, going to report the BAS, which is the basic allowance for subsistence, which is basically covering a military member's meals. The next line item, which is one of the biggest mistakes that we see on applications in a financial aid office, is the payments to tax-deferred pension and retirement savings plans, either paid directly or withheld from earnings. Now, these can usually be found on the W-2 form in box 12A through 12D, and there's a code associated with that amount, which would either be D, E, F, G, H, or S. Now, it doesn't necessarily have to be in box 12. Sometimes it's in box 14 if you're, for instance, a state employee that receive or have money automatically deducted for a state pension system. So you would have to report that. You want to make sure you're not including code DD in box 12 because that's your employer health contributions. So for instance, in this W-2, you can see that there is $1,234 that's being reported into a tax-deferred pension plan. That amount would need to be reported here. The next line item is looking at veterans' non-education benefits such as disability, death pension, dependency and indemnity compensation, or VA educational work-study allowances. However, for the non-education benefits, the law was changed back in 2009, so you are not going to be including any amount you receive from the Montgomery GI Bill, Dependents Education Assistance Program, VA Vocational Rehabilitation Program, Veterans Education Assistance Program benefits, and the post 9/11 GI Bill. And then finally, you're reporting on any other untaxed income not reported anywhere else, such as workers' compensation, disability benefits, untaxed foreign income, untaxed portions of health savings accounts, etc. But you're not going to include these following items, and these are mostly benefits from, for instance, welfare payments, untaxed Social Security benefits, earned income credit, additional child tax credit, etc. And now we move along to the parent asset section. So the first question here asks, as of today, does the total amount of your parents' current assets exceed $7,100? Now in this example it says $7,100, but this amount is actually going to be different for every family because it is based on the prior information you entered about your parents' taxes and income, untaxed income, and benefits. So when they're talking about assets, they're talking about the next three line items, which we'll go over step by step. And if that amount exceeds whatever is listed here, you must report those line items. And so you'll answer yes. So the first line item asks, as of today, what is your parents' total current balance of cash, savings, and checking? The next line item is going to ask, as of today, what is the net worth of your parents' investments, including real estate, but not your parents' primary home where they live? So let's take a look at all the investments that they're asking about. So investments can include other real estate. So if your parents have a secondary home, like a vacation home or a rental home, maybe they even own a motel or have an Airbnb, they need to report that net value of real estate. And then for rental properties, for instance, let's say you even have a rental unit within your primary home. Although you're not reporting on the primary value of your house where you're living, you do have to report on a rental unit within your primary home if it has its own entrance, kitchen, and bathroom, and it's rented to someone other than a family member. Now, the way you would determine this eligibility amount is to, let's just say, for instance, you have a house. You would take the total area of your home, and let's say, for instance, it's 1,000 square feet. If you were to sell this house today, let's say it's worth $100,000, and you still owe $60,000 on the house, so you have $40,000 in equity. And then you have a rental unit in your home. So maybe you fixed up a basement or another room in the house, and you're renting it out to somebody else. It's got its own kitchen, bath, and entrance, and let's say it's 100 square feet, which is 10% of the total square footage of the house. So you'd take the current market value of the house, which is the $100,000, multiply that by 10% to get the $10,000. And then you would take the total mortgage debt of $60,000 and also multiply that by 10% to get $6,000. And then you would subtract that mortgage debt from the market value so that the net value of that rental unit in the house is $4,000. That's what you would report in this line item. Now, going back to the other investments, we're also looking at trust funds, money market funds, mutual funds, certificates of deposit, stocks, stock options, bonds, other securities, installment and land sales contracts, commodities, and then we talk about qualified educational benefits. Now here's a diagram of how you are to report the various educational plan benefits that are in existence. So you can read through these. There's the Coverdell, the 529 prepaid tuition, and then you have the older accounts, the UGMA and UTMA, as well as Series 1 and EE savings bonds. So the investments that you're not going to report in this line item, which would be the home that your parents live in, unless there's that rental unit, which we just went through the calculation of how you would figure that out. Cash savings and checking, which was reported in the prior line item. ABLE accounts, which are pre-tax or tax-deferred programs for individuals with disabilities. And you're also not going to report the value of any life insurance, and especially retirement plans, 401k plans, pension funds, annuities, non-education IRAs, and KEO plans. So the reason those are highlighted in red is you're reporting, the previous questions had asked about pre-tax or tax-deferred funds that were paid into the system during the calendar year 2019, which is what we're looking at. So they're only looking at the amount taken out during the year. They don't want you to report on the total value of your IRAs. And that is a common mistake that is often made, so you want to make sure you're doing that correctly. So the investment value versus debt. So basically they're saying the investment value is the current balance or market value of those investments as of the day you submit your FAFSA form. And the debt is only those debts related to the investments. So you can't put on, for instance, credit card debt if it's not associated with the investment that is underlying. And then you're going to report of the net worth of your parents' current business and or their investment farm. Now you're not including a family farm or a family business with 100 or fewer full-time or full-time equivalent employees. So let's take a look at this in a little more in depth. So let's say you are a mechanic that owns a garage. You own the building, the land, the machinery inside. You have inventory. In order to figure out the net value of your business, you would report the market value of the land if you were to sell that, the value of the buildings, machinery, equipment, and inventory, and then you're going to subtract out any debt that's associated with that business. So if you have a mortgage on the land or the property, or if you still owe your creditors for the inventory you have, but you're not going to include business value if the value of that small business is owned by your family and your family controls more than 50% of that business and you have 100 or fewer full-time or full-time equivalent employees. So as a small business, if you just have a few people and you own more than 50% of that business, you're not going to report anything in this line item. And when they say family owned, this can include parents, sisters, cousins, anybody else related to you, even through marriage. Now with an investment farm, if you live on that farm or own the farm and actively participate in its operation, you're not going to report any line item here. However, there are situations where there are investment farms where you can purchase a small slice of that farm as an investment solely. You don't actually work on the farm or even live on the farm or even participate in its operation. Then you would report the net value of the farm here. And also you can see here there are other situations where even if you do own the farm but you rent it out to other individuals, you may need to report that amount here. And that gets us through a very lengthy Part 6 on parent financials. Coming up, we are going to be going into Part 7, the student tax information for the FAFSA. Hopefully you found this information useful. If so, please like and subscribe, and we'll see you in the next video. Thank you.